This is Debt Free in 30, where every week we take 30 minutes and talk to industry experts about debt, money, and personal finance. Here's your host, Doug Hoyes.
It's the month of April, and in Canada that means it's tax time, our favorite time of the year. Today on Debt Free in 30, we're going to talk about tax problems, but not tax problems in the conventional sense. Lots of people owe money on their taxes, and we've talked before on this show about how to deal with tax debt. If you can afford it, your best option is to work out a payment plan directly with Canada Revenue Agency. As a general rule, they'll almost always accept a plan if you can pay off the tax debt over a period of up to 1 year. So if you owe $12,000 and you can afford to pay them $1,000 per month, they'll probably accept a $1,000 a month deal. If you owe more tax than you can hope to repay, a consumer proposal or a bankruptcy may be your best option because taxes can be eliminated in a bankruptcy or a consumer proposal. So if you have more tax debt than you can repay, talk to a licensed insolvency trustee to find out if a consumer proposal or bankruptcy is the best solution for you. But what if your tax problem is more basic than that? What if you don't know how much you owe? What if you haven't filed your taxes? What if CRA is pursuing you? What do you do? Who do you turn to? Should you talk to a tax preparer, a bookkeeper, an accountant, or do you need a lawyer or a licensed insolvency trustee? At this time of year, there are lots of commercials on the radio for tax accountants and tax lawyers. Well, what's the difference? How do you know who to turn to? How do you know if you're getting bad tax advice? To answer these questions, I'm joined today by Jeanette Martin, who helps people get out of debt in the North York and Scarborough offices of Hoyes Michaelis. Jeanette, thanks for being here today. How are you doing?
I'm good. How are you, Doug?
I'm good, thanks. So you and I were talking a few weeks ago, and you told me the story of Tom and Janice. Now, that's not their real names, and obviously I don't want you to reveal any personal information, but I want you to give me the gist of their situation. They had some debt issues, so they came in to talk to you. So tell me about your meeting with Tom and Janice.
Oh, sure. So Tom and Janice are currently in a proposal with us. But prior to meeting with us, Janice, although she's in her late 70s, she still works part-time and is considered self-employed. She had years that she did not pay her income tax or HST, and that accumulated and accumulated. So prior to meeting with us, they went to a tax lawyer hoping to reduce that tax or not have to pay it. That did not work out. So when I met with them, they had other debts. We put together a proposal, and that dealt with that debt. And that's fine. So after their proposal's in place, they're still preparing their taxes by hand, her husband is, and on one of his more recent tax returns, they claimed a business expense, but they put it on the wrong line of the tax return, but they wrote a note on the tax return explaining why it was there. The expense was disallowed by Revenue Canada, pending the supporting documents. They panicked. They again went back to a tax lawyer, and the tax lawyer charged them some money and wrote to Revenue Canada explaining that it was simply an error, that the expense was claimed on the wrong line. It was eventually worked out. I've suggested to them that maybe they considered going to a tax preparer to avoid these type of issues in the future. I'm not sure if they will, but I'm not sure that going to a tax lawyer really was
Yeah, it's not what they needed to do. I mean, what they had was, in effect, a clerical error. They put the expense on the wrong line, and so the solution is to send in the, T1 adjustment request to Revenue Canada saying, oh, sorry, I put it on this line. It should have been on that line. Here's why. Here's the receipts. Here's the support, whatever. That's something that you can actually do yourself, but certainly having an accountant or a bookkeeper or a tax preparer do that as well is a lot cheaper than having a lawyer write a letter. Because I'm assuming the lawyer didn't do that for $50. I assume that writing that letter cost $1,000, $2,000, $3,000, something like that. Or do you know?
I agree. I believe it was thousands of dollars.
Thousands of dollars. So okay. So in their case, they made a mistake and ended up going to a lawyer to fix it when there were certainly cheaper solutions. And this is one of the kind of things that bugs me, that the lawyer should have said to them, look, this is a pretty simple matter. You can either do it yourself, let me send you to a bookkeeper to fill out the form, or let me just fill out the form for you. I'll charge you a few bucks, because obviously nobody works for free, but charging the full lawyer cost was probably a little bit excessive. So
taking advantage, yes.
Yeah, they were taking an advantage, and obviously they ended up paying a bunch of money to a lawyer for something they could have got a lot cheaper. Now, there was another person you were telling about, and again, we're going to change names here because I don't want to be using anybody's names on the radio here, and we'll maybe not reveal every single fact we know about this person, but let's call this guy Joe. Tell me about Joe's story.
Oh, sure. So recently I took a call from an elderly gentleman who was in his 80s. So Joe receives OAS and CPP, and as well, he also has a pension coming from another country. He did use a tax preparer, the same tax preparer, for several years, and that tax preparer did not include his out-of-country pension in his tax return. He did not think it had to be claimed. CRA eventually caught up with this and reassessed Joe for several years. When they reassessed him, not only did he have to pay income tax, he also became ineligible for the guaranteed income supplement that he had claimed for several years. So now he has a tax debt with Revenue Canada of about $12,000. And on a fixed income, he cannot possibly pay that back. He could not enter into a payment arrangement because he really can't afford it. So OAS or CPP, they're now garnishing his pension by, I think, $385 a month, which is really going to leave him cash-strapped. When I was speaking to him about this debt, he also mentioned he does have some credit card debts, and part of that credit card debt that he has now incurred is because he also hired or went to speak to a tax lawyer about this problem to see if they could help him. So they charged him, I believe, about $5,000. $5,000? They cannot help him.
Wow.
Yes.
And this guy doesn't have any money. Where did he get the $5,000 from?
Credit card.
So he took a cash advance on his credit card to pay $5,000 to a lawyer to try to get him out of this debt, which they couldn't. And I guess this kind of raises a pretty important point here that lawyers are great when there's some kind of criminal activity and you need defending, or it's a very complicated legal issue. In this particular case, in Joe's case, this was a very simple issue. He forgot to put some of his income on his tax return. There's no gray area of law here. And I understand why the mistake was made. I mean, obviously, he gets the T-slip from CPP and OAS every year, so he remembers to put it on. His pension from another country doesn't send him a Canadian T-slip, and it's probably not massive dollars, so he just, I didn't realize I was supposed to put it on. If you don't tell your tax preparer about all your sources of income, they're not going to know to put them on either. So it was a pretty simple matter. He didn't report his income, so he owes the taxes on it. That's not something a lawyer can get you out of. So in this particular case, the solution for Joe, I assume, was either a bankruptcy or a proposal, depending on what his income was, to deal with the debt?
That's right. That's right. He's not sure which way he's going to handle it. I mean, he is in his 80s, so
yeah, and
you have to take that into consideration.
And often for somebody in their 80s, we say, well, they're not going to be able to garnish your wages because you don't have any. But in his case, CRA is garnishing his CPP. So he is actually losing money every month because of this debt. So if he was to go bankrupt or file a proposal, that tax debt would be eliminated. The garnishment on his CPP would stop right away. So I guess he's really got to decide, is the cost of the bankruptcy or the proposal worth it to save that garnishment? And it probably will be in his case. So have you run into other people who've had their CPP garnished in the past?
Occasionally I have, yes. Yes, actually, I met with somebody yesterday who's losing all of their CPP to the government, but he has not filed his taxes in 10 years.
Wow. And in my experience, that's about the only time CRA is going to garnish a pension, is if there is something pretty egregious wrong. If you haven't filed your taxes in 10 years, well, they don't know how much you owe, So in order to get your attention, it's not uncommon for them to take some or all of your CPP. A normal creditor can't do that. If you owe money to Visa or MasterCard, well, they can't take your CPP, but CRA can. So I guess the message here, Jeanette, is number one, file your taxes, because you're going to get into trouble if you can't. And number two, if you have a tax issue, well, you can consult a lawyer if you want, but remember, lawyers deal with specific things. They aren't able to make a proposal to eliminate the debt. That's not something lawyers do.
That's right.
So
that's not a negotiable amount. The tax that you owe is the tax that you owe. Also, CRA does usually send out some warning signs. They send out letters. They don't usually just guarantee your pay out of the blue.
Yeah, and in the case you just cited where the person hadn't filed their taxes for 10 years, well, that certainly wasn't out of the blue. That was something that had accumulated over an extended period of time. So
that's right.
Excellent. Well, I appreciate those real-life stories. Thanks for being here, Jeanette.
Okay, you're welcome.
Thanks, Jeanette. We're going to take a quick break, and we'll be right back right here on Debt Free in 30. Welcome back. Today on Debt Free in 30, we're talking about how to identify whether or not you're getting bad tax advice. On the first segment, Jeanette Martin told us 2 examples of people she's helped who had relatively straightforward tax problems, but they went overboard and hired a tax lawyer to help them. They ended up paying thousands of dollars to the tax lawyer for nothing. So let's answer today's question. How do you know if you're getting bad tax advice? How do you know if you need a tax lawyer, a tax accountant, or someone else? Well, the first step is to identify your problem. And as I see it, there are 4 possible problems. First, you've got unfiled tax returns. Second, Canada Revenue Agency has audited or assessed you and they say you've committed a crime. Third, CRA has made a mistake. Perhaps they've disallowed a deduction and now they say you owe more money than you actually do. And then fourth, you actually owe CRA money. You've filed your tax returns and there are no mistakes. You simply owe money for taxes. So let's go through each of those 4 problem areas and figure out whether you need a tax lawyer or tax accountant or someone else to help you solve the problem. So problem number 1, unfiled tax returns. If you haven't filed your taxes for last year or a few years, that's a problem. As I said in the first segment with Jeanette, in my experience, the one thing that will upset CRA more than anything else is unfiled taxes. They get upset if you owe them money, but they get even more upset if you haven't filed your taxes. Why? Because they don't know how much you owe them. They don't know how serious the problem is, and they don't like uncertainty. If you have unfiled tax returns, the solution is simple. You need to file your tax returns. You need to either do them yourself or find a competent tax preparer, bookkeeper, or accountant to get them filed. So how do you find a good tax preparer? Well, ask around. Ask your friends or family. If you work in a specific industry, ask other people in your industry who they use. For example, if you're a truck driver, ask other truck drivers who they use to prepare their taxes. Truck drivers can claim specific deductions for meals when they're on the road, so using a tax preparer who is familiar with the trucking industry makes sense. If you don't know anyone, call your local Hoyes Michaelis office at 310 Plan and we'll tell you who we would recommend. Now let me address one more issue here. A lot of people come to me and say, well, wait a minute, I haven't filed my taxes for 2 or 3 years and Revenue Canada is leaving me alone. If I file the taxes and it turns out I owe money, isn't that going to be a serious problem? Well, yes it is. But it's going to be an even more serious problem if and when Canada Revenue Agency figures out, wait a minute, you haven't filed your taxes. And they're going to know if you have any income that gets reported directly to them. Employment income, for example, it goes on a T4 slip, that goes to CRA. If they get a T4 slip and there's no tax return, eventually they're going to say, wait a minute, why isn't there a tax return? And that's going to set off the alarm bells for them. It may not be income. You may be self-employed, and so there are no T4s going to CRA. But if you have any money in a bank account that earns interest, an RSP contribution you make, anything else that gets reported to CRA, if there isn't a tax return filed, that's going to raise the alarm bells for them. So in my experience, It's better to file your taxes so you don't have them rushing to judgment and starting to seize bank accounts and garnish you wages. And then once the tax is filed, then you've got to deal with the taxes that are owing. We're going to talk about that, but let's go back to the 4 different problems that you can have that may require expert help. So the first one is not filing your taxes. We talked about that. Get them filed. Problem number 2, Canada Revenue Agency says you've committed a crime. So if CRA says you've committed fraud, well, that's a criminal act, so you probably want to talk to a lawyer. For example, if CRA says you deliberately underreported your income, they may say that's fraud. If they say you made up a bunch of fake deductions, well, that's fraud. Fraud's serious. It's a criminal act, and if you are convicted, you could be subject to severe fines, restitution orders, or even jail time. So if you've been charged with a criminal offense, you should consult a lawyer. Now, a lawyer can do 2 things. First, there's what's called solicitor-client privilege, meaning that you can tell your lawyer anything and it's confidential. So if you know you've committed fraud or some other illegal act, you want to tell your lawyer the full story and you want it to be confidential. Second, of course, a lawyer can defend you. They can negotiate with CRA or CRA's lawyers, which are from the Department of Justice, and if your case gets to court, they can represent you in court. So when you're charged with a crime, yes, I agree, you should talk to a lawyer. Now, problem number 3 is what if CRA has made a mistake? So what if you haven't committed a crime? And let's face it, it's pretty rare for somebody to be committing deliberate tax evasion. That's a very rare circumstance. It's much more common that a simple mistake is made. Making a mistake on a tax return is not a crime. Forgetting to put one of your T4s on your tax return is not a crime. Putting an expense on the wrong line of a tax form is not a mistake. That's a clerical error. You fix the error and off you go. Yes, there's probably going to be a penalty for the error. You're going to owe some taxes, maybe some penalties and interest, and that's it. It's not a criminal event, so you don't need a lawyer. And in my experience, that's the most common scenario. You made a mistake, you fix it, you move on. And in the examples we talked about with Jeanette in the first segment, that's what happened. It was an error, it needed to be fixed. Now, where else could you need a lawyer? Well, tax lawyers are valuable for very complicated tax situations. If you have a corporation or a trust or an offshore company, then a tax lawyer may be necessary to make sure all of the tax forms are filed correctly. If you're setting up a new corporation, a lawyer is very helpful. You could fill out the paperwork yourself, but in most cases, it's prudent to spend the extra money and have a lawyer do the work. So if you haven't committed a crime, but you disagree with what CRA is saying, what do you do? In other words, if you've received a notice of assessment from Canada Revenue Agency and they've disallowed a deduction, what do? Do you need a lawyer? Generally, the answer is no, you don't need a lawyer. You need an accountant to do 2 things. First, review the notice of assessment to see if Revenue Canada is correct. Perhaps you tried to deduct something that you can't deduct. Maybe you did forget to include one of your T4s or forget to report some other income. If that's the case, CRA is correct, so you don't need to fight it. You owe the tax. However, if there is an error, an accountant can help you deal with CRA to correct the mistake. In most cases, it's a simple procedure. You or your accountant fills out what's called a T1 adjustment request. And you can go to the show notes for this episode at hoyes.com. That's HOYES.com. I've got a link to the CRA website where you can get a copy of a T1 adjustment request, or you can go to Canada Revenue Agency's website and do a search for T1 adjustment request. It's a simple form. You can download it right from CRA's website, and you simply put the line number for your tax return that requires adjustment. You put the original number and then the adjusted number with an explanation of the difference. That's it. An accountant is helpful if you don't know what line it was on the original tax return, or if you don't know how to describe the change. Otherwise, you may be able to do it yourself. In most cases, there's no point in paying a lawyer to do it. Problem number 4, you owe money. Well, if your taxes are filed and they were filed correctly and CRA assessed them correctly, you now owe money. So what do? Well, we're going to discuss that in the next segment. But before we finish talking about whether or not you need a lawyer or a tax accountant, here are some things you can do. First of all, do some research. When you're talking to the professional, the tax lawyer, the tax accountant, ask a lot of questions. Make sure that the advice you're getting is specific to your situation. I said earlier, if you're a self-employed truck driver, dealing with an accountant who understands that industry is great because they can give you very specific advice. You don't want general advice if your situation is more specific. And if you're at all unsure, get a second opinion and then compare the advice. And finally, be sure that the advisor is acting in your best interest. Don't be talking to a mutual fund salesman about how you should be handling the tax consequences of an investment. They're there to sell you an investment. You want someone who is just working for you, giving you unbiased advice, which is generally the case with someone like a tax accountant. Those are 4 things you should look out for when you're dealing with tax issues, and that hopefully gives you some practical advice on how to recognize bad tax advice. We're going to take a quick break, and then I'll come back to wrap it up with some final thoughts and some suggestions on what to do if you actually do owe taxes. We'll be right back. You're listening to Debt Free in 30.
You're listening to Debt Free in 30. Here's your host, Doug Hoyes.
Welcome back. It's time for the 30-second recap of what we discussed today. On today's show, we discussed bad tax advice, and Jeanette Martin told us the story of 2 people who paid a lot of money to tax lawyers for no reason. Ian Martin explained that if you have tax debt, a consumer proposal may be a good option. That's the 30-second recap of what we discussed today. Tax lawyers serve an important function. If you're charged with tax evasion or are setting up a complicated tax structure, you should see a tax lawyer. But if your problem is that you put an expense on the wrong line of a tax return, you don't need a lawyer. You need to correct a problem, either yourself or with a tax accountant, who can generally do it more cheaply than a high-priced lawyer. If your problem is that you owe a lot of money in taxes and you can't pay it, a lawyer can't help you. CRA does have the power to reduce interest and penalties in exceptional circumstances, but the law says that CRA cannot reduce the principal you owe on your taxes unless you go bankrupt or file a consumer proposal. A lawyer can't file a bankruptcy or consumer proposal. Only a licensed insolvency trustee can. So if you owe taxes and want a no-charge initial consultation to find out your options, give Hoyes Michaelis a call at 310-PLAN and we'll walk you through the process. That's our show for today. Full show notes are available on our website, including links to CRA's website and the T1 adjustment form we talked about, and information on how a consumer proposal or bankruptcy can eliminate taxes. So please go to our website at hoyes.com, that's HOYES.com, for more information. Thanks for listening. Until next week, I'm Doug Hoyes. That was Debt Free in 30.
Thanks for listening. That was Debt Free in 30.